Alibaba has been an interesting stock to follow in 2024. The stock got off to a slow start in the year and then in early October jumped to record highs, reaching close to $110 per share. Of course, at that moment, I told investors it was a good time to take profits because the stimulus that was promised by the Chinese government had not yet went into effect, and it was uncertain the impact it was going to have. But the stock price for Alibaba jumped from $75 up to $110. So I thought it was a good time to take profits. So I'm going to share with you the recent developments with Alibaba and update my buy recommendation for Alibaba stock, let you know if I think it's a buy, hold, or a sell. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So you can see the volatility here in Alibaba's share price in 2024, starting off the year flat and then jumping to those record highs, closer to $110 per share, and then investor enthusiasm easing a bit here, and now the stock is at $88 per share. Of course, as I mentioned in the beginning of the video, when the stock price was at near the highs, I made this video about 1 month ago. It was published on October 3rd, and I took Alibaba stock off my list of top stocks to buy, and I downgraded it one notch, and I said it was a good time for investors to take profits in Alibaba stock. Hopefully, you made some money on this stock so far year to date in 2024. The company provided an update to investors on November 15th, and there were some key strategic initiatives that they achieved success in. First of all, growth in their cloud business accelerated from prior quarters, with revenue from public cloud products growing in double digits and AI-related product revenue delivering triple-digit growth. Alibaba enjoying phenomenal success in its AI business, as it's been rated as one of the best AI cloud services companies in China. The revenue growth in the quarter was also driven by improving monetization of its Taobao and Tmall group, which included GMV-based service fees. Overall, revenue in the quarter jumped to 33.7 billion in US dollars, and that was an increase of 5% year over year. Income from operations jumped to 5 billion US dollars, which was also an increase of 5% year over year. The increases in profit, in cash flow, and free cash flow have been disappointing year to date in 2024 for Alibaba. The strategic changes the company has implemented are working well so far, and the company is generating accelerating growth from the AI segment. But overall growth has been difficult, and the economy in China has been stagnant. That's why the government needed to think about some kind of stimulus to spur economic development. And things look even worse as the incoming administration in the United States is going to take a more adversarial approach to China, already talking about raising tariffs and making other changes to make it more difficult for the Chinese government to subsidize local business to help facilitate exports. And the US market is one of the main areas the Chinese economy exports to. As I highlighted, cash flow from operations was down 36% year over year, and Alibaba's management saying their decrease in free cash flow was mainly attributed to investments in the Alibaba cloud infrastructure and refunds to Tmall merchants after they canceled annual service fee and other working capital changes. Recall how the large cap tech companies in the US I've been following, like Alphabet and Microsoft and others, are spending on their cloud infrastructure, building out data centers optimized for artificial intelligence. Alibaba is doing a similar thing here. They're investing in upgrading and updating their infrastructure for data center and optimizing it for artificial intelligence. But instead of Alibaba buying NVIDIA chips, which I don't believe they have access to because of the export restrictions that the US government is placing on NVIDIA's latest technology, they're likely buying other accelerated GPUs to fill these data centers, primarily based on GPUs now, instead of their previous data centers, which were primarily based on CPUs. So their efforts in Taobao and Tmall led to higher purchase frequency and improved feedback regarding the overall shopping experience. It's good to see that the initiatives they implemented are resulting in increasing engagement from customers. That's what you like to see when you make a new initiative. You like to see the customer feedback being positive. So Alibaba Cloud gained notable recognition as the service provider in choice in China. According to the Forrester, Public Cloud Platforms in China in 2024, Alibaba Cloud was named a leader, achieving the highest score possible in 23 out of 32 criteria, as well as top scores in both the current offering and strategic categories. And you saw earlier triple-digit growth year over year for Alibaba's AI related segment, and AI growing across the world here, as you see another data point from China demonstrating triple-digit year-over-year growth for Alibaba, one of the larger AI segments in the region. So given the recent drawdown in Alibaba's share price, it's now trading at a forward price to earnings of 8.983. And in my opinion, this is a good value for long-term investors to earn some upside here with Alibaba stock. To update my recommendation here, you'll notice that I've had Alibaba stock rated as a buy, and I last updated that recommendation on October 2nd. On October 2nd, when I made that video telling investors that it was a good time to take profits in Alibaba stock, I had downgraded it from my list of top 25 stocks. So it was previously rated as a top 25 stock, but then when that stock price jumped by so much, I told investors if they had been following and they had placed Alibaba as one of their top 25 holdings, it would be a good idea to take some profits to trim your positions. But I still had it rated as a buy. I didn't downgrade it more than one notch. So in this video here, I'm reiterating that buy recommendation on November 15, telling investors that given the stock price, the valuation, and the company's long-term prospects, I think it's a good value for long-term investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.